All right. Looks like we got things up and running here. Well, good morning. Good morning, good morning, good morning. My name is Daniel. I'm with Vantage Point AI, and we're going to get things going with our discussion around earnings season. It's earnings season. A lot of companies are reporting earnings in the markets, and we'll spend some time just helping you understand what the benefit to earnings season is, what is earnings season, just have some good conversation around the financial markets, and then we'll take a look at some of the artificial intelligence forecasts around some of the stocks that are reporting earnings, as well as anything else you might want to take a look at. So, as always, the chat box is open. If you're here and you're want to get involved in the conversation, take this opportunity to do that and say hi. Let me know you're there. Hello, Asuma. Thank you for being here. Hey, Chad. Hello, hello. We'll take a few minutes to get everybody logged in. I know it's 11:32 a.m. We had 11:30 start time, but sometimes it takes, life happens, and people need a little extra time to get into the session. So give them a minute or two before we get going. But interesting markets today. There's been a lot of things happening, not only from an earnings standpoint, but just general markets. We'll spend some time. We'll take a look at the ES. We'll take a look at the NASDAQ, the Dow, give everybody an opportunity to understand what's going on from an artificial intelligence forecasting standpoint. Hello, Renee. Thank you for being here. Nice to see you again. We had some good conversations yesterday, so always nice to see you in our sessions. All right, looking like everything is working as designed. So let's talk about earnings for just a second. Let's dig into some of the content today. Hello, hey, VP user here. I love it. Thank you. When we talk about earnings, there's a couple of things, and I'll just walk through some basic details. I'm not going to get into too much of the weeds, if you will, but it's important to understand that around earnings season, earning reports can have an impact on price, can have an impact on price for a short term. And knowing when those earnings reports is something that is certainly key to your success. So let's dig in and let's talk a little bit about that. Before we do, just remember, we are talking about trading, and trading does involve risk. You shouldn't be trading with money that you can't afford to lose. That's why it's called risk capital. There is no perfect solution out there, no crystal ball. We're talking about stacking the odds in your favor here. Also, I may share some user experiences with you. Just to understand, I'm not sharing those experiences with you to say you're going to perform just like them. Their results may be atypical, and I haven't verified the results. But I do like to share with you what other people have said about these, trainings and technology. And then we're going to spend all our time in our simulated environment walking through the details, looking at some examples as a group. So hopefully you can walk away with some good, valuable information that can help. This is education, not providing trading advice, purely from an educational standpoint. So, hey, Janet. Yes. Yeah. Thank you for joining. Great. Looks like we have a lot of Vantage Point users on our session already. I love that. Our Vantage Point family members are very important to us. And even if you don't have the Vantage Point software, this is a session to help you understand a little bit more about the markets, a little bit more about trading, a little bit more to arm you with information. And if you decide to join the Vantage Point family, great. But let's talk about what earnings are. Just, very, very simply, the earnings are ultimately a measure of the money a company makes, and companies' performance are often evaluated in terms of earnings per share, right? And one of the things I've got noted here is that it's the most important indicator of a company's financial health. Now, one of the things that I always say is that last line is very, very important. A company's financial health, not a stock's health, not the stock's ability to make you money or lose you money, right? This is talking about the company. Earnings is an assessment of that company's overall performance. Now, we know, from a stock market standpoint, if that company isn't doing well, then the likelihood that prices are going to rise from a stock standpoint are lower. But it doesn't mean that prices can't go up when a stock isn't doing that well from an earnings standpoint. Or it doesn't mean that prices couldn't drop drastically if that stock is doing very well, or that company is doing very well from a company or earnings standpoint. So we've got to make sure we're thinking about that. Separating earnings from the stock and understanding that earnings are about the company. Now, can it provide you information as a stock trader that's helpful? Absolutely. Is it useful? Yes. Is it something you want to keep track of? In my opinion, sure. But they are separate things. Share price can go down on bad earnings, but also can go up. Share price can go up on good earnings, but also can go down. And that's one of the things that everybody has to recognize when it comes to earnings season. All right, so let's talk about the importance of earnings. You know, one of the things, I jumped to the end here. Let's go back a few slides. Just make sure I don't skip too far. Here we go. When are they reported? So earnings season, I've said that word, and if we have anybody new to the financial markets on this session, understand that earnings are reported, you know, starting the first 2 weeks after the end of a quarter, right? The first quarter was January, February, March. Earnings season kicks off at the beginning of April, and there is, a season for it where a lot of companies start reporting pretty quickly. You know, you see a lot of companies reporting on the same day. There is a specific company that people talk about as kicking off earnings season, and I usually like to pop quiz people, but I see that there were some VantagePoint family members in yesterday's session that are also here that have the answer already. So I'll just give it out. Alcoa. Alcoa is the company that traditionally kicks off earnings season. When Alcoa reports, around when Alcoa is reporting, you'll see a lot of companies start reporting, a lot of big companies, a lot of names you know. Because the period of time in which a large number of publicly traded companies release their quarterly reports is called earnings season, right? Each quarter, the last month of each quarter, you got to kind of keep an eye on when earnings season kicks off. But after 1 or 2 weeks after the last month of each quarter, so December ends, beginning of January, earnings season starts. March ends, beginning of April, earnings season starts. June ends, beginning of July, and then when September ends, beginning of October starts the earnings season, the last one of the year. So just knowing when that season comes around is good. Every company doesn't report on the same day, right? And a lot of companies can report early in the earnings season. There's a lot of resources out there to help you understand when companies report, but just knowing that there is a time period, the first few weeks after a quarter ends, you'll see a lot of reporting happening. So what is being reported? When we talk about earnings being reported, let's just talk through this a little bit so we're all on the same page. If you take a company's revenue, and in this example, we're talking 100 million in revenue, and expenses, say they're 30 million. That leaves you net income for a company of 70 million. Again, this is just an easy example just to give you a good picture of it. If you take off some of the other things that impact earnings, D&E, interest, taxes, for instance, let's say the net earnings after all of that comes down to 45 million. If you do that math, that would be the net earnings after everything's been considered. Well, for a publicly traded company, there's going to be a number of outstanding shares. So all you do is you take that net earnings, divide it by the total outstanding shares, and you get what's called earnings per share, otherwise known as EPS. In this example on the screen, you can see that EPS is $2.25. That's the primary thing that is reported once a quarter. At the end of each quarter, the EPS is being reported after everything that you see on the screen has been considered and calculated. Well, if Q4, if the fourth quarter, a company has an EPS of $2.20, and in Q1 they have an EPS of $2.25, like this example here, what that company is saying is that company is performing better in Q1 than in Q4. Well, that's a good thing for the company, but you've got to remember that there are earnings estimates that happen. There's analysts out there that are analyzing that company's performance and estimating where they believe that company should have performed in quarter one. A lot of the times, those estimates are all over the place. You usually can look at multiple analysts and see that there are a number of different estimates out there. Well, if that company, in this example, company ABC, or that's actually a company, looks at earnings per share of $2.25, but it was being estimated at $2.30. Well, that came in under the estimate, which means in the analyst's eyes, that company didn't perform as well as expected. Even though they performed better than Q4, they didn't perform as well as expected. and that could have a negative impact on the share price. So companies doing well, earnings look better, but the share price drops because they didn't do as good as expected. Or in some cases, an earnings per share is above what's expected, but there's other news reported at that earnings time. For instance, Netflix reports subscribers. There's a lot of things that get reported in that earnings call, and sometimes the EPS is above what's expected, but there is some other stat or piece of information that is shared when earnings are reported that would cause that share price to drop. Comes down to trader sentiment. Earnings time and the impact that earnings has on that stock price comes down to trader sentiment, analyst sentiment, professional sentiment, whatever you want to call it. It's what drives prices up or down. Let me just take a look at the questions box and the chat box over here, see if we have any questions or chats I need to pay attention to. I'll keep my eye on it throughout today's training as usual, and if there's any questions, jump in, get involved. The key here is that you might hear something you didn't know, you might hear a repeat of something you knew, and it just reminds you of it. Regardless, this is education I think everybody could find benefit in. Last thing I want to talk about is the importance of knowing earnings. We just talked through a quick example. We're gonna jump into some charts and do some analysis in the artificial intelligence here in a second. But we just talked through a quick example of how earnings can impact share price, how earnings can impact what people are doing in the financial markets and how they feel about that stock. Well, there's things you need to know around earnings time to be prepared for those price moves. For instance, when that company is reporting, the day that company is reporting is a key piece of information. Not only the day, but as the slide says, the time of day. Sometimes companies will report before the market's open, sometimes during market trading hours, sometimes after the market closes. Knowing what time of day is something that is valuable, especially if you're an investor or you're trading that stock or that opportunity. So that's a key piece. The day and the time of day are something that you want to make sure you pay attention to. And I'll talk about some of the reasons behind that. Let's do it right now. If you don't have an earnings play as part of your trade plan, and this is just education, I'm not providing trading advice here, but you've got to ask yourself, if I don't feel comfortable trading through or around earnings, well, then I need to know when earnings are going to be reported so that I can get out of that position, right? Or I can do something to protect myself in that position. If I don't want to trade through earnings, then an exit is the only thing that's available. Now, if I do have a strategy that I can apply to an earnings time, for instance, a straddle or a strangle, or maybe I've got a strategy that is specific to playing through earnings so that I can hedge and protect myself. Well, then great. Knowing when earnings are expected to being reported is key because that tells you when you need to deploy your strategy. And if it's before the open on, for instance, today's the 25th, well, then that strategy needed to be deployed at least yesterday, the 24th, before the market closed. If it's after the market trading hours today, after the close, then that strategy could be deployed today. And that's why it's so important to know what day and what time of day that earnings is expected to be reported, so you can either exit and protect yourself by completely being in cash on that position, or deploy some sort of strategy the day before or the day of, depending on when those are going to report. There's also some strategies that can provide you some great gains, some income opportunities weeks before earnings are reported. If you've ever heard of the implied volatility rush, there's a specific strategy around that. If you know that strategy, let me know in the chat box. If you're familiar with playing and selling options into increasing IV before earnings gets reported, that's an implied volatility rush option strategy that can produce some income leading up to earnings. If you're familiar with it, I'd love to hear about it. I'd love to hear in the questions box if that's something that you deploy. Because in that case, knowing when earnings are expected to report a few weeks before they report is really key. All right, so that's one strategy. Also, understanding right after earnings report, the day after, the morning after, knowing that earnings just reported yesterday or the day before yesterday can help you understand what impact that could have on price. Something like earnings could have an impact on price for about a 72-hour period. Remember, earnings are reported 4 times a year for a stock. That 4 times a year is not going to push price around throughout the entire year. It's only going to have an impact on price while that earnings conversation is on the table. I would give it about a 72-hour window. That's just my rule of thumb. A 72-hour window is from the time that earnings is reported is really all you need for that earnings to have an impact on price and then fade away and the inner markets pick up. And we'll talk about those inner markets here in a second, but that's usually the window. Sometimes it's less, sometimes it's more. Again, just as an example, 72 hours is something you can use. So if you do not have an earnings strategy as part of your trade plan, then exiting or being out of that position or that stock before earnings is announced and then waiting to get back into that position for 72 hours after it's announced, in my opinion, is a safe way to go about it, right? It's a safe way to go about it. Now, you may have a different strategy. Just understand that earnings announcement is going to have an impact on price. It's going to be usually pretty short-lived, and then the trends will take back over, and those trends are a result, what we believe here at VantagePoint, from those global markets that are influencing that stock. Also, knowing what is being estimated, the second bullet point on the slide here, knowing what is being estimated can certainly help a trader, especially if you have the estimates from multiple sources, right? If you have the estimates from multiple sources, then that can help you understand, what's being reported and how big of an impact it could have on price. If those estimates are very close together from multiple sources, then that earnings is pretty well identified and you know what to expect. If it's all over the place and multiple analysts or multiple pieces of information are giving you wide ranges of earnings, well, that's a little bit more volatile, and that could create bigger price swings. So knowing what is estimated is valuable information as well. And then knowing how to use the information, right? Whether you trade it, whether you don't trade it, just knowing what steps to take, what you have from a date standpoint, from an earnings report standpoint, and how to apply it to your trading. All of this happens, like I say, 4 times a year for every stock that reports earnings like this. They don't all report on the same day. So that's one of the things that you've got to understand when it comes down to earnings, is just knowing that information is key. Knowledge is power, right? Even if you decide I'm going to sit on the sideline because I have this knowledge, it's powerful to be able to protect yourself. After all, as like I always say, protecting your downside, minimizing your downside, a lot of times is more valuable than or comes before trying to maximize your upside. So knowing the earnings date is key. Hey, thank you. I see there's a comment here about implied volatility is heightened, especially when the proximity of earnings. Yeah. That goes back to that strategy, the IV rush. Implied volatility can help you understand that wider price swings are expected. Well, as an options trader or an options seller, higher implied volatility gives me the ability to get higher premiums. And collecting those premiums leading up to earnings is a valuable strategy. If you're an options trader, you're an options seller, and that's something that you're comfortable with. But you've got to understand one thing. As soon as that earnings is reported, that volatility basically falls off a cliff, right? That rush quickly turns into an IV crash because now the cat's out of the bag, the information is known. So if you're using that strategy, then that's a strategy to collect premium leading up to earnings. It means those positions have to be closed prior to earnings being announced, right? Otherwise, it turns to dust. All right. So there's a lot of different strategies out there that you can employ. Thank you, F. Puller, for chatting in that. Let's jump into the VantagePoint software. This is the software that I use to do my analysis on the financial markets. If you've attended any of these YouTube lives before, you've probably seen this before. If you're part of the VantagePoint family members, you're probably looking at something similar on your computers. But the key here is just making sure you have a tool that is a valuable resource to provide you insight and information. If it's VantagePoint, Great. We know VantagePoint is a patented technology that's using artificial intelligence to understand the global market influencing factors. Some very, very valuable information can be found in those hidden patterns and relationships. If you're watching this session and you're not part of the VantagePoint family, you can certainly find out more information by going to VantagePointForecast.com. We'll put that link in the chat for you so you can click on that. But the key here is that you've got to have a resource, a tool that you use on a consistent basis. And in this case, we're utilizing artificial intelligence. So if you look at the screen right now, I'm looking at the S&P 500. I'm just gonna bring up a pen here so that I can draw on the screen and everybody can see where my mouse is, and as I highlight some things, I think it's just helpful to be able to draw on the screen. So, all right, here we go. Nice bright pink color. Here we go. So we can see right now we're looking at the S&P 500 at the top of the screen, looking at the June contract of the ES from a futures standpoint. So if you're looking at this, you can see that we've got, 3 months of data identified. In case anybody's wondering, if you're new to this and you haven't seen VantagePoint before, I've got some predictive indicators on the screen as well as support and resistance. I'm just looking at the ES right now just to give everybody a sense of what we were expecting from a market move today. And then we'll dig into some of the earnings that we were talking about, like Verizon, Amazon, McDonald's. Heck, we can look at Microsoft. You guys tell me if there's something else you want to take a look at, but we'll dig into that. Let's get a baseline for what we're seeing here in VantagePoint. What we're seeing, hey Lane, I see your chat. Nice to see you in the session, Lane Mendelson, the president of Vantage Point AI. Thank you for jumping into the chat. But when we dig into this, what we're looking at an S&P 500 here is I've got a blue line going across the screen. That is a predicted moving average. And it's enhanced with artificial intelligence doing global market analysis. And for the ES, as a matter of fact, I can show you what it's analyzing. The AI is going out and it's looking at these over 30 plus markets to figure out what is influencing the S&P 500. Just a quick aside, some of these are stocks, like you can see here. Some of these are ETFs in green. You also have global markets like the yen, the euro. The reason light sweet crude oil, that's a nucleus market. We know it influences the S&P. So what I'm doing in the VantagePoint software is allowing the AI to do its pattern recognition. It's looking at linear and nonlinear relationships and looking at the open, the high, the low, the close, volume, open interest, all these data points. We're talking about millions and millions of data points to figure out what's expected to happen. And then it's creating those predictive indicators. So not to get too far in the weeds, but that blue line is a predicted moving average. I'm also looking at this shaded area here. If you're not a VantagePoint user, this is called the predicted neural index. The predicted neural index helps me understand short-term strength or weakness of the trend. Also, I can look at these. These are predicted differences. These will help me understand the momentum of the trend from a timing standpoint to help me understand if momentum is building, because they are predictive. Matter of fact, they can give me momentum predictions 1, 2, and 3 days in advance, right? And we've got a predicted RSI down here. This is like a traditional RSI, except it's been enhanced. The AI has done global market analysis, figured out those intermarkets, figured out what's influencing the S&P 500, and then use that information to predict RSI 1 day in the future, which can help me understand momentum from a close price standpoint. I also have verified support and resistance on the screen. These are some additional indicators that once somebody has mastered the VantagePoint basic indicators, they can add things like this that will automatically draw support and resistance levels right on the chart, as well as provide some zones. And I even have in the VantagePoint software a predicted high and a predicted low for every futures market, every asset that's covered in the VantagePoint software, every stock, and we'll look at some of those. But this is very valuable when it comes down to earnings, because if I know where support or resistance is, I know what momentum looks like from a forecasted standpoint. I've got a predicted high and a predicted low. If I've got all that information at my disposal with a predicted format, and by the way, these predictions, for instance, are up to 87.4% accurate, some of them. If you take that and say, you're telling me I can be right on where something is expected to go 87 out of 100 days, because we're looking at end of day data, That's pretty valuable if you ask me. So what we were seeing here, before we dive into the earnings piece of this, is what we were seeing from an ES standpoint is major consolidation. That blue line is saying sideways to bearish. And there's several different crossovers. If I look at my short-term crossover, which is a very sensitive predictive indicator, it's indicating bearishness for the ES today. If I look at my long-term, which is a 3-day trend forecast, it's indicating consolidation. As you can see, that line is moving sideways or bearishly across my screen, even though it is above that simple moving average. I still have a shaded green cloud, but I can see there's consolidation happening from a long-term standpoint, which tells me this trend, overall, this trend is clearly a trend that has weakened and has forecasted some consolidation. I've got a predicted high of 41.75 and a predicted low of 41.34. And look, you can see that here. I'm on the predicted high and low, and you can see over here in the legend, P high, P low, and then the range, 41-point range. Well, this is saying I can expect the ES to be between 41.75 and 41.34 today. I had that information at 6:30 p.m. Eastern Time last night, just like all the other, Vantage Point family members and users. They had that information. They were prepared to understand what's expected, and because we got a weakness from a trend standpoint, we're probably thinking about from the middle to the lower half of that candle. So we would expect to see the ES down in this range based on what the artificial intelligence is telling us. Now, this isn't saying that we have a total trend reversal yet. The 1-day trend certainly reversed, but the 2 and the 3-day are indicating consolidation. Now, obviously, I've got a trained eye. I've been utilizing this technology now for over a decade. I've been looking at the financial markets for over 25 years. But as a VantagePoint user, it's very, very comforting to know what's expected, and knowing that the ES is expected to be down in the bottom half of this range last night at 6:30 p.m., this morning before the market opens, provides some really great insight and information. This doesn't say that I've got overall weakness happening just yet, so we're getting more consolidation, right? We can see that. And check out support and resistance. We're literally probably about halfway between support and resistance, which gives me more information to understand this could go either way, up or down, but more from a consolidation standpoint. We're expecting sideways move so far of what we're looking at, sideways to bearish move. Well, if I go down here to my momentum indicators, I can see that momentum has been peeling off for a few days now. Momentum turned, well, the long-term moment, this dark blue line has been creating lower highs going back to here, right? Going back to the beginning of April. The medium term has as well. So there's been momentum peeling off of the ES from a predicted format since April 3rd. And you can see that with the predictive differences. That tells me that in this consolidated market, the artificial intelligence is saying momentum has been forecasted to peel off. We can see my predicted RSI is already indicating bearishness because it's creating lower highs. So I'm getting all the information I know that I need to say I can expect the ES to be consolidated to bearish today based on what these predictive indicators are saying. And that's not me. I'm just reading the charts. I'm reading what the AI is saying, and it's telling me very clearly that I can expect weakness on the S&P 500 today. We can go look at the S&P 500 and see what we got. I think everybody can probably do it in their platform if they want to, but I'm going to go just take a look really quickly and see if I can pull up the S&P 500, see what it's telling me. Excuse me. All right, so from an ES standpoint, looks like it's down 37 right now, 41.22. So we certainly got that weakness. We're down below that predicted low. We can see that 41.23, 41.22. Exactly what we were expecting. Weakness, bearishness, down around that predicted low. Now it's down below the predicted low, which means in this situation we could see where if we've got a futures trader on watching today's session, stop losses, protective stops, mitigating downside, mitigating losses is one of those key things that happens when you see something like this happen. But we were clear, based on the AI, we were expecting weakness at best, more consolidation on the S&P 500 today. So we are not surprised by what's going on. Yes, F. Pilar, it is. I see your question. Sorry, I missed it earlier. Is this platform prognosticating a future outcome? Yes, up to 3 days out. Up to 3 days out. So certainly use that link at VantagePointForecast.com so that you can kind of see some of that stuff. Now let's talk about layering everything that I just covered, layering earnings into that, layering those forecasts and these predictive indicators into earnings analysis. For instance, Wells Fargo. Here's the same information that we covered, but on a Wells Fargo chart. And one of the things you'll notice is that we've got a tool in the software for users that have mastered the Vantage Point indicators. This isn't something that just comes right out of the box. But we have a tool that identifies earnings. It's this little dollar sign right here. You can see it. I put a square of kind of scribbling around it in case anybody misses it. This is an earnings identifier to tell me that earnings are either happening or have recently happened on any stock. Wells Fargo already reported their earnings, so that's why you see it on this timeline on 4/14. This is 4/14. This is the day that earnings were announced for Wells Fargo. Now, what this earnings announcement is saying is that it was, estimated of $1.15 from an EPS standpoint. From an EPS standpoint, that's what was expected from a Wells Fargo earnings conversation. Well, if 115 was expected, it reported 123. So that is a positive earnings expectation or a positive earnings report. So for the day of that report and a few days after, what we would be expecting from a positive report is some increase in price. And you can certainly see we got an increase in price after that report from that day it was reported on for about 72 hours. Now, the question I get a lot is, can Vantage Point forecast earnings? And the answer to that is no. But can Vantage Point forecast the trends or the trend strength around earnings? The answer to that is yes, meaning it's not going to forecast what the earnings are expected to be, but it can forecast based on those hidden patterns and relationships whether or not this stock is expected to be driven up, sideways, or down based on not only what this stock is doing, but those inner markets, those other markets that we looked at on the ES that are influencing it. So by drawing some conclusions from where that blue line is leading into earnings, more importantly, what that neural index is, what color that green bar or red bar is right down here is leading into earnings. About 48 hours before earnings, I can use this information down here to say the artificial intelligence is indicating short-term bullishness leading into earnings. So let's talk about how you can use this information, because now that you see it on the chart, now you can see what it looks like if you do not have an earnings strategy that's part of your trading plan. Right? We always say trade your plan, right? Don't. I mean, there's no reason to go gamble black or red, if you will, in the financial markets. Utilize your trade plan to make your trade decisions. So that means leading right up to earnings. If this is an opportunity that I was able to take advantage of because of this fresh crossover right here. By the way, this was 4-6. Vantage Point artificial intelligence forecasted Wells Fargo to move higher. Well, if I know earnings is coming up here on the 14th, if I don't have earnings as part of my strategy, I need to make the decision to exit this on 4/13. Well, if I had done that and utilizing this predictive information, that's a quick 5% roughly. This is, obviously I'm giving you hypothetical gains here in four trading days. 1,000 shares of Wells Fargo on that move in just 4 trading days could have generated $1,800 hypothetically in gains leading up to earnings, right? So when you sit back and you think about it, that's valuable before earnings. That's almost 5%. Knowing when earnings is expected to report can help you hold on to that if you don't have an earnings play as part of your strategy. If you have an earnings play as part of your strategy and you can recognize that the artificial intelligence is indicating strength or bullishness around earnings, well, that can give you confidence to say, okay, I'm going to set a stop loss maybe somewhere around my entry to give there enough room for that earnings report to happen. Or maybe I could set a stop loss off of that low of 72 hours before, so I'm protected at the downside. Just understand that when earnings gets reported, it can gap drastically one way or the other. If it gaps over or around or gaps your stop loss because it's too close, that stop loss is going to do nothing for you. And that's one of the things people need to be aware of, is that if I set a stop loss and for some reason there's a horrible earnings and it gaps and opens the market down here around 36.50 or something, and I had a stop loss at 37.50, that stop loss means nothing at that point because it gapped right over it, right? So when you take a step back and you think about that, then if I'm going to play through earnings, and earnings are reporting here on 4/14, I have to have a very clear and specific set of rules or a strategy to protect myself in that situation. Well, in this case, you can see the Neural Index was green, indicating bullishness leading into earnings. It caused the earnings reported. It caused the market to move up dramatically and up to the top, the high after that 72 hours after earnings is over a 12% gain in 8 trading days. Again, hypothetically, that's about $4,500 in this example on Wells Fargo. There was some substantial gains leading into earnings. Could have taken that 5% off the table at that point, 4%, of course, depending on your entry. But then utilizing the artificial intelligence through earnings could have provided you some extra gains there. And even up to today, you can see that that is still almost a 10% positive move on Wells Fargo since the artificial intelligence forecasted bullishness for this stock on April 6th. I see there's a question about what is the track record for predicting earnings. Listen to what I was saying. VantagePoint does not predict earnings. Okay? What VantagePoint predicts is the trend, the market movements, and it can predict it even around earnings. Each stock is rated on how accurate the artificial intelligence is predicting that strength of trend around earnings, and I'll show you that here in just a second. So that's something that is available, and each stock, it identifies it. Now, I don't have it on the screen yet. I'm going to turn it on in just a moment once everybody is comfortable with utilizing the artificial intelligence or understanding how to combine the two from an earnings standpoint. All right, as you can tell, this is a live session. Do a lot of talking, so if you have some questions or you want to see more information, you can always throw it into the questions box. If I can't get to it here in today's session, then you can go to VantagePointForecast.com. That link is right there in the chat box for you to click, and we can talk with you one-on-one. However you want to do it, we're here to help. All right, so now let's talk about what we see leading into earnings. We see that the blue line is above the black line or the gray line. We see that the Neural Index 48 hours out is green. We see that we've got momentum forecasted and increasing, higher lows leading into that earnings announcement. We see the predicted RSI is also indicating bullish momentum. So the artificial intelligence and all the information we have leading into that earnings announcement is indicating bullishness. Now, it's not 100% accurate. It's not perfect, but the AI is doing a level of analysis that's impossible for me. So I'm going to use it to my advantage, right? Now, I can also go a step further, and if I've mastered the VantagePoint indicators and I've added these earnings indicators to what I'm doing day in and day out, I can go a step further. Let me just refresh this chart, and I can update this earnings flag into an earnings index. See, the artificial intelligence can track how well it indicates how well price moves compared to what was predicted around earnings, and provides me that information in the form of a index right here. So for Wells Fargo, the artificial intelligence is about 81% accurate in forecasting price around earnings. 81%. Now, a lot of people would say that earnings, trading around earnings is a 50-50 type situation, right? It may be. It very well may be. But if artificial intelligence has the ability to find hidden patterns and relationships and provide me some information around trend, around price, around strength, and I can get an accurate forecast like this, 81%, which means over the last year, the AI was able to accurately determine the direction price went after earnings was reported. It's not 100%, never will be. I'm glad it's not 100%. I wouldn't believe it, right? But knowing that it can be accurate on Wells Fargo, this is, based on this stock, to the tune of 81%, gives me some confidence. And when it comes down to trading, I think it's safe to say that confidence is key, right? If I've got confidence and I'm using good information and tools that are doing something that can't be done anywhere else, well, then I can use that information to understand what's expected. All right. Here's another one for Coca-Cola. You can see that if I refresh my chart, I'm just going to refresh this Coca-Cola one so everybody can see this earnings flag and indication for Coca-Cola says it's 71% accurate. Well, that may be below my risk tolerance. That may be information that says, you know what, I needed to be above your trading rules are your trading rules. But this is saying that the artificial intelligence has the ability over the last year to be accurate about 71% around earnings in predicting price. Well, let's just walk through it and see if that was an accurate prediction. The blue line was above. This is the Coca-Cola forecast that was forecasted to go up way back here at the beginning of April. And it's just, gone up almost the entire time. But leading into earnings, what did this say about what was expected? Well, 48 hours before earnings, my neural index was green, saying prices after earnings are reported are expected to be higher. Now, momentum was sideways to bullish, right? Even a bearish, long-term was even a little bit bearish here. So we're getting some consolidation from momentum. So even the neural index is green, but momentum is saying that there is momentum peeling off or consolidating on Coca-Cola, not as powerful as Wells Fargo. Well, what does that mean for me? What does that mean when I look at earnings, when I look at Coca-Cola and what's going on? That means I can expect higher prices. I got higher prices. Look where Coca-Cola opened. Look where it went up to after earnings was reported, right? But then look where it closed. And this is why it's so important to have an earnings strategy as part of your trading. The strategy might be, I don't want to trade around earnings. Fine. You're exiting Coca-Cola. If that is your strategy and you're using this information, you're exiting Coca-Cola before those earnings are reported, and there's a pretty substantial gain there. Wow, it's almost 6.5% in 33 trading days. This says 500 shares. Maybe you're doing 5 contracts. No matter how you slice it, that's a substantial gain. And knowing that earnings is coming up, it's hypothetical here, but knowing that earnings is coming up gives you the information you need to make a trade decision, right, prior to earnings. Now, maybe you have an earnings play as part of your strategy, right? Maybe you're long 10 calls on this leading right up to earnings, right? Well, your strategy could be, you know what, I'm going to take half of those calls off, lock in any gains, cover my premium, let half of them stay. Or I could, I could hedge my bets here. I could do something related to puts that could give me a spread to protect myself in case earnings don't go as expected. That's up to you. Just have a play. Have a strategy. It could be get out. It could be take part of it out. It could be, hey, buy into it. A lot of different strategies. In this case, what we saw is earnings reported, prices jumped. Big gap up on price. This is a gap, by the way. This is where it closed. This is where it opened the next day. That is a substantial gap. As soon as earnings were reported, gains were taken and it closed that gap and closed down here. We'll take a look at what VantagePoint is predicting for Coca-Cola for today. Now remember, we've got about a 72-hour window where this earnings information is going to impact price in some way, shape, or form. Well, the artificial intelligence, by looking at this, is saying, well, we're seeing momentum consolidating and peeling off. Predicted RSI rolled over, indicating, we've got bearish momentum building in. So we're seeing a substantial weakening from a momentum standpoint, and our predicted high is not as high as the previous day's high. This is still, some of the earnings impact because we're within that 72-hour window. But what VantagePoint is saying is that you could see prices today on Coca-Cola range between 64.46 and 63.63. Coca-Cola right now, let's see. 63.97. So Coca-Cola is right here within that predicted trading range. just as expected. We're seeing that trend continue, consolidate, and even lose some momentum, just as the artificial intelligence told me at 6:30 last night I would expect. So the earnings forecast played out well. Prices gapped up, some quick gains on earnings, and then what's happening right now with price is exactly what the AI said it was expected to happen. How can we add earnings day on the software? Steven, I assume you're part of the VantagePoint family member. I'm just reading the trends. We can reach out to you and help you get that added after I'm done talking. Okay, thank you. All right, so here's Verizon. Let's talk about earnings coming up on something, right? So at 6:30 last night, this information was updated. It told me right here on the chart, it told me what day earnings are expected. This little symbol, for those of you that are new to the Vantage Point, this little symbol will appear 7 days prior to the earnings announcement, so I can prepare myself. So I can look for these. So I can apply whatever strategy I need to. Looking at Verizon, if I go into my settings, let me just refresh this chart to get that index. There we go. Now it's refreshed and updated. The AI is about 87% accurate around earnings related to Verizon. Now I want to point something out. There's been some very valuable trends on Verizon leading into earnings, right? Here's a shorting opportunity, just going crossover to crossover, 500 shares, right? Here's a long opportunity, again, crossover to crossover, out before that big back gap down. For those of you who like to buy puts, there's a great trend off of that forecast to the downside. These are very, very profitable moves on the underlying asset. The underlying asset on these three moves, both going short and long, it's about an 18% hypothetical gain, right? No matter how you slice it. Doesn't matter how you slice it. That's valuable information. And then use these forecasts leading into earnings to give you a little bit more insight. Let me show you. We know the artificial intelligence is accurate around earnings from a price standpoint to the tune of 87% over the last year. Good. I've got that. What we're seeing 48 hours before that earnings announcement, which is happening by clicking on this, I can see April 15th before the open. April 25th before the open. So that would mean that the earnings was expected to be reported this morning. Well, I would have known that 7 days before earnings. This has been on here for 7 days. 48 hours before that report, which is 4/21, that would have been Friday's information. I had the neural index saying that I had bearishness expected from price post earnings. Well, how do I know that? The neural index is red. It's right here. Well, I can use my other indicators to try to strengthen that assessment and see that my blue line is below, the shaded area is red, right? I can also look at my momentum to see that momentum has been peeling off for a week or two. I can see my predicted RSI is also bearish. And I don't really have anything giving me any bullish expectation, which means as soon as earnings is reported, I'd be expecting lower prices. Well, how about, I'm going to go pull up Verizon right now. I'm just looking at trading view at Verizon, and everybody could probably do this on their own if they wanted to, but Verizon opened today. Wow, the low is 36.57. It opened way down here. Now it's come up some since then, but look, the artificial intelligence said we could expect lower prices after the announcement, if you will, the earnings report, earnings before the open. As soon as the market opens, it makes that move. It opens down there, and there's a very, very profitable opportunity that was indicated from the artificial intelligence. That's why I love having access to this information, because going to bed last night knowing what's expected to happen today gives me a lot of comfort, and a lot of the Vantage Point users the ability to protect themselves in these kinds of situations. Here's McDonald's, one of the ones that I was talking about. We're going to show today. So when we look at McDonald's, we can see a very nice trend on McDonald's going on right now from the most recent forecast to yesterday's close. We got almost a 10% hypothetical gain here. 5 contracts, you can see that's a substantial gain, or it's 26 trading days. So no matter how you slice it, that's about $1 a day gains on McDonald's since this forecast on 3/16. But I can see here by looking at this, and let me just refresh my chart here, I can see here that I've got earnings coming up today. I can click on this to see that is before the open, so that means they would have already reported. Now I've got to put myself in the shoes of a user. That's 6:30 last night. I'm getting this information. The accuracy around the McDonald's earnings forecast is 61%. How do I know that? I know that because this is telling me what the AI, how accurate it's been over the last year around earnings. I've got a green neural index leading in 48 hours leading up to that earnings, and I can see prices are expected to jump based on that earnings report. Now, understand that after a big trend like this, if prices jump after that earnings report, there is going to be some profit taking. How do I know that? I can use my indicators in VantagePoint to understand that this is in fact, yesterday's high is in fact a 52-week high. So if prices do what the artificial intelligence is indicating and cause a jump after earnings, I can expect some profit taking off of that high based on trader sentiment, especially after the fact that it's been on this long uptrend for a month and a half. So now I've got the information to be prepared. And yes, this line up here, this green line, I put it on. It's a 52-week high marker that tells me that that is in fact the 52-week high for McDonald's. Well, if prices open up here above that 52-week high, there is going to be some profit taking, right? Now I have the information I need to be prepared. Now I have the information that I can make some decisions on. Maybe my decision was, this trend has been going long enough. I'm good. No matter what happens, I'm taking my profits off the table. I'm closing out my position. You could have done that yesterday if that's the case, if that's your strategy around earnings. Why? Because the AI, the software is saying earnings are expected before the open on the 25th, and accuracy is right at about 61%, right? Okay. If I made the decision to hold that, then I would want to see McDonald's jump up, but I need to be prepared for what happens. Let me go pull up McDonald's, and we'll do a quick comparison. And I don't always do this, but I think seeing the live movements. Here we go. Here's McDonald's in trading view, so we can see exactly what happened. There it is. It opened. It gapped up, positive gain after earnings above that 52-week high, and then profit taken immediately happened. Again, being armed with that information and knowing what was expected to happen from an earnings standpoint could have given you really, really great opportunities. Some of you may play those strategies a lot of different ways. Some of you may say, you know what, I'm going to wait for it to open above earnings, and then I'm going to go sell some calls as soon as that happens, or I'm going to go buy some puts and play off of that fall back below that 52-week high. And no matter how you slice it, there are multiple strategies that would have worked out very well having that information in advance on McDonald's if you didn't have it. All right. Let me see. Yeah, absolutely. We'll reach out to you afterwards, FPLR. I see a lot of your questions are related to what the software can do and what it's forecasting. We can certainly walk you through that one by one. Yep. By the way, there is an ability, for those of you that haven't seen this before, there is an ability to scan and find stocks that have earnings coming up, right? I can go into my indicator tree here, and I have a scanning tool in the software where I can load earnings into a scan, and then I can scan over 1,000 charts in this scan. Depending on which sectors you have, it will go through and tell me how far out earnings is on all the assets. There's 1,639 things being scanned right now. And I've got this scan, without getting too far in the weeds, because I know we have some newer people in this, I've got this scan that tells me, how far out earnings is for a lot of these companies. Look, I can sort ascending, descending, American Tower, one day. As I scroll through this, not only does it tell me, when those earnings are expected to be in days, it also tells me whether it's before the open, after the market close, if that information is available from our data provider. There's tons of them. There's 1,200 different stocks that have earnings being reported from anywhere from 1 day out to 30-something days out right now. I can also do some searching on this and say I only want to find things that are recent that have positive or bullish forecast. So this is a scanner that I can adjust according to what I'm looking for. I'm not going to walk through all the details of it today, but the answer to your question is yes. And if you are skilled enough and you've mastered the Vantage Point indicators and decided at some point you want to add some of this earnings information, we can certainly even go as far as adding that index to find the things that are forecasted most accurately around earnings. So you can see I've added that index now, and you can see there's several companies that have a very high forecast around earnings that have earnings coming up here in the near future. For instance, United Rentals, for instance, 97% accuracy. Earnings is expected tomorrow. That earnings is expected, doesn't tell me whether it's before the open, so we didn't get that information. And we can see we've got a neural index that is green at this point on United Rentals. So that's how you would use this information day in and day out, right? Good. VWAP is, again, we're talking about predictive information here, FAMFul. We're not talking about VWAP. We're talking about using VantagePoint's predictive indicators that are patented indicators. These are proprietary indicators. But if you have some questions about that, we can certainly dig into it. If you'd like to talk one-on-one, I'm happy to. All right, let's keep on going. There were some questions I think somebody had asked for Google. Here's a long, by the way, this is a very long forecast on General Electric. If anybody's missed out on this trend, it's been very, very productive for Vantage Point users since the beginning of the year for GE. You know, all the way through this forecast, this GE trend has been just absolutely lights out. Look at this, nice long trend. 79 trading days with a 55% gain over that 79 trading days. Hypothetically, let's just kick this to 1,000 shares, $35,000 in gains. You know, that's substantial. And then leading into earnings, you can see there was a couple of earnings forecasts here. There was one here. Prices did what were expected. There was another one here where you can see before the open today, we were expecting the earnings on General Electric. One thing I noticed on GE is that we likely have a 52-week high. I'm going to throw my 52-week indicator on here. We do. Yesterday's high is the 52-week high. So similar to what we were talking about on McDonald's, the neural index, the artificial intelligence, is indicating bullishness around price 48 hours before earnings come out. I would expect prices to be higher after earnings. But because this is a 52-week high and we're getting into some resistance levels here, I would expect profit taking to happen as soon as that report happens. Meaning what I would be expecting is a price jump at the open and then a pullback after the open from profit taking. That's what I would be expecting based on what we're reading on the indicators and the charts, and we should have seen that happen in GE. You know, nothing is perfect. I don't want anybody to think that I'm talking about this happening every single time exactly that way, day in, day out. Nothing is perfect. But if you stack the odds in your favor with predictive indicators like this, talking about an accuracy at 90% at GE around earnings, you can have some really, really valuable information. Somebody else, who else reported today? Was it Google? Let's look. All right, so here's the artificial intelligence information on Google. We can see that we are in an absolute just channel from a Google standpoint. VantagePoint's forecasting ability around Google related to earnings is 77%. Earnings is expected on Google today. Today is the 25th. Yep, today the 25th. And what VantagePoint is saying is that we could expect prices to be slightly bit higher, based on earnings information. But understand something. The trend is bearish, right? The blue line is below. The predicted high and predicted low are bearish, right? Momentum is faltering and bearish or consolidating. In this case, RSI is consolidating. So I don't have all my predictive indicators saying bullishness, but I do have bullish price based on the earnings, the neural index, which provides the earnings information. So if I look at this, I would say Google, yeah, expecting higher prices, but it's stuck in this channel and it's been in a downtrend now for a few days. From this high, it's a pretty substantial move. I've got to understand that. So I would expect this to be right within this candle. Nothing unexpected about Google's information today based on what I'm seeing in the VantagePoint software. Somebody was asking for that. I don't know if that was you, Renee, but let me look. I'm just looking at the chats here in YouTube to see if I can recall who it was that was asking about Google. Don't see it right off the bat, so I apologize, but hopefully that was valuable information for you and what you were looking for. All right, BWA. My ticker does not ring a bell. Let's see. Borg Warner. All right, let's take a look at it. This is for Burl Keller. So what we see here from a BWA standpoint, number one, I don't have earnings in the next 7 days. I do see that we've been in an uptrend on BWA now since 413 from a medium-term standpoint. I also see, oh, it was. Okay. All right. Thank you. That was for Michael. Thank you, Michael. Hopefully Google was helpful. I can see that there is a resistance level that was tested and failed yesterday. I can see that momentum has faltered and kind of worked its way out. We can see by looking at our momentum indicators that they're moving sideways. I don't have, by the way, if you didn't watch the support and resistance live that we did, go to, first of all, go and subscribe to the Vantage Point AI channel. If you haven't already subscribed, subscribe on this page. But in addition to that, go to the videos for the lives and pick the one about support and resistance so you can watch some of the details related to support and resistance. And sorry, my phone's ringing as you can't tell. Let me see if I can get that to stop. You know, you never know what's going to happen when you go live, right? So what I was saying is go to the lives, watch the one on support and resistance, and you'll see that one of the things that's so important to resistance is momentum. I need bullish momentum to break through resistance. I also need increasing bullish volume. So BWA at this point doesn't have either one of those, and I would not expect it to break that resistance level. And I have a predicted low that's higher and a predicted high that's lower. Sorry, let me try that again. The predicted high is lower. The predicted low is lower, right? Momentum is faltering. There is still strength in the trend, but it doesn't agree with everything else that we're seeing. As a matter of fact, if I go and I look through all my predictive indicators, I'm probably 50-50 on this, which means I would expect it to be within this predicted range or slightly bit lower, because that resistance, when something fails off of resistance like this right here, and there is no bullish momentum to support, prices can fall pretty dramatically. So that's what I'd be expecting by looking at these forecasts. Hopefully that was helpful. I know it's 12:34, so I think we've covered everything we need to cover. No problem, Renee. I appreciate that. Yeah, we looked at the information. So Market Q's is asking, is it possible for the AI to forecast the close today? We looked at the S&P 500 Market Q's at the beginning of this session. Of course, we can look at the SPY. It does not forecast the close. It forecasts the overall direction and the market movements of the day. So that you can see the predicted high and predicted low from a SPY standpoint. Here's the SPY right here for you, so you can look at what the predictive indicators were saying, and you can see we're certainly getting bearishness expected. Matter of fact, VantagePoint is predicting a pretty low low with a bearish downtrend happening and momentum peeling off. So just like we saw earlier, we'd be expecting the SPY to be fairly low today, especially with the fact that there is not enough. There is basically no predictive momentum pushing bullishly on this right now. So we'd expect the SPY to be lower based on what we're seeing here. Well, I think I've covered everything I need to cover. I don't see any other chats rolling in. If you do have questions or want to dig into more information, oh, I missed Meta. But if you do have questions or want to dig into more information, you can go to VantagePointSoftware.com and we can certainly have those conversations. Here is Meta. Meta is forecasted from an earnings standpoint about 62%. It's going to be after the market close on the 26th. That is tomorrow after the market close. VantagePoint had a nice bullish forecast on Meta that came to an end and was forecasted down starting a few days ago. There's a really nice move on Meta forecasted with the AI. And, here is the neural index, which is red with bearish momentum, bearish downtrend, bearish momentum on Meta. So I think it's clear to see what VantagePoint is indicating around earnings for Meta. You're very welcome. Thank you for being here. Thank you for participating. I love seeing all the chats and the interaction. Of course, if you haven't subscribed to the VantagePoint AI channel, subscribe. You know, we do these sessions every couple of weeks, and if there's something that you want to see or talk about, let us know. And if you are not part of the VantagePoint family, go to VantagePointForecast.com and get all the information you're looking for. We'll be glad to help you no matter what. Thank you for your time today, and thank you for letting me give you the view from my vantage point. I'm signing off.